All right, welcome everyone to the ULTY portfolio update for December 8th on Monday. And YieldMax put out an announcement about strategic updates to ULTY, the YieldMax Ultra Option Income Strategy ETF. And we're going to get into what those are. Two main things, really. Portfolio construction, which just means new stock picking process, and option strategy expansion, which basically means more downside protection and ways to squeeze more income out of stocks like Google. So we're going to talk about that in just a little bit. But first, let's go over the overall market. Nasdaq was down 0.5% today, but ULTY was up almost 0.5% today. So that's really interesting to see that, out of the 25, 24 stocks YieldMax picked, they happened to beat the market on this one day. I find that interesting. One thing I wanted to point out that we'll talk about later is that in the past, ULTY has held equities and Bitcoin, two asset classes, and really actually just equities. IBIT was a recent addition. I forget when they added IBIT. So they really just held equities. Now, though, if you look at it, they've got equities, Bitcoin, gold, and treasuries. So 4 asset classes. And I mean, all of us probably have 4 asset classes or more. You might add like REITs or real estate in there. So that's kind of cool to see. I never really thought of it in that terms of ULTY just holding more than equities. So I like that in the portfolio. But what was down today? The gold miners down 2.31. Google also down 2.31. Circle Internet down 1.88. So not really big moves. I mean, I keep saying this, but it's not like, Getty's in there down 14% on a day, or Rocket Lab. Actually, let's check on our old friend RGTI. How did that do? Oh, that was up today. What about QTUM, the quantum one? That one was up, or that's not the right one. QUBT. That one up 1.32. Okay, so the quantum's doing all right there. But always like to check on them, just like we check on old girlfriends. Only kidding. So yeah, total positions 24. Of those, 14 winners, 10 losers. Average position up 0.76. Up here, up top, we see from last week, just the last 4 days, not including today. ULTY had a minor decline in shares outstanding, or I guess major, 3%. Not huge, but I think this might turn around. I think we might see the shares outstanding increase and more inflows into ULTY, especially if it remains stable. I don't know if this will be the right chart for it or not. So let's see. But if we can get some stability out of ULTY, like flat is good because you get flat, you get your dividend, and then, you keep collecting that. 1 month, not so good. But since around here, November, and for a few days, it's been trading flat. And I like flat in ULTY. So that's good to see. Let's go into this announcement, though, because I think that's what most people care about. That's what I find interesting. Where should we start here? The new approach introduces a more balanced model that includes expanded exposure to underlying reference assets. Okay? I don't really know what expanded means here, but I know balanced means less concentration in high volatility names. Now, it does say high volatility equities will continue to serve as the primary engine for generating options premiums engine. I don't think they meant to use engine twice, but hey, I make mistakes too. But if I read that right, things like Circle, SoFi, Palantir, NewScale, Bitcoin, Coinbase, Broadcom, Robinhood, and Iron, those are still going to be the ones where that generate them the income. However, we may see lower income. They add that lower volatility large cap companies will also be added to seek to provide more NAV stability and create more resilient long-term base. Now, I believe that when I see Google in there, when I see Amazon in there, TLT, Gold, even Morgan Stanley. However, they did recently sell IBM. They recently sold Meta or Facebook, and they recently sold Costco and Eli Lilly. So they got out of a few of those large cap stable names. So that's kind of interesting, and I want to get an answer on why they did that. I'm going to try to contact Mike Coe and ask him about that. Now, together, they add together, the enhanced structure seeks to balance options premium generation with smoother investor experience. Smoother investor experience is a euphemism for that, for down 55% year to date. Now, I know that's not total return, but even when the overall market was going up, ULTY was not going up in that, in a total return basis, and that pissed people off. Back to the press release. Yeah. The fund's combined equity portfolio aims to expand its investments across sectors, for sure. You got retail, you got banking, you got AI in there, all sorts of things. Bitcoin, nuclear technology, all sorts of things in there. So we do have more sectors, industries, and other asset classes where possible. And they have 4 asset classes there. So that is for sure true, and I think a good thing for the portfolio. Now, the options strategy expansion. I'll read it first, and then we're going to look at a specific example. We're going to look at the Alcoa position. So, adjustments to ULTY's option strategies are being introduced with the goal of managing downside risk more effectively, while improving the capture of potential upside gains. To accomplish this, they're going to incorporate selective hedging strategies to reduce the severity of market declines. Okay, this was like way back when ULTY started putting in protective puts. The thing is here, they're going to add even more protective puts. And let me just show you the Alcoa example. I want to get to that because that's a good one. So I had this highlighted earlier. Sorry. Ignore that. And I'm just going to go to focus on the 26th. The 26th up here, we're going to highlight that because that's when they entered into the position. And you see they've got a call there for 9,250 contracts. Remember, it's 100 shares per contract. Their position size was 925,000. So this contract, this call was covered by all the shares. This one down here is double that, 18,500, and it's a put that they bought at 37.50. They bought a put at 37.50 for twice the amount of shares that they actually have. And you can do that with puts. And so what they're basically doing is saying, all right, let's say Alcoa goes down quite a bit from where we bought it at, which was 40.81, 40.81, and they bought the protected put at 37.50. So if it were to decline to 37.50, they would get the gains from these puts appreciating, but they would get double that because they bought more puts than they had shares. So they're basically buying more downside protection, and the puts could increase in value as the stock goes down because you'd have the right. If the stock went down to $30, you buy the put, so you have the right to sell it at 37.50. And then they also sold puts at 39.50 to collect some more income, not just income from the call, but income from the puts as well. And so that's where you see more income there and being generated kind of on the downside almost. And the call right there, 42, they kind of capped their upside because you see when they bought it, it was $40.81. I'll make that bigger. 40.81, and then they capped it at $42. But then, they adjusted the position as well. But you can see, even as they adjust, every time they're doing puts, they're buying more puts than they have shares for to protect their downside. So we may see lower distribution amounts, or actually we already are seeing lower distribution amounts, but we're seeing a flat price. Now let's go back to that. Leveraged option strategies that seek to capture more upside during market advances. I'm not 100% sure what that is. I've tried to listen to the calls, and I'm getting a little brain dead when I hear all these options strategies explained. So it takes me a while to understand them. So if you understand it, great. Let me know. I'm still going to try to decipher that by looking at these. But so far, if we look at what we're tracking, ignore IREN because I'm still trying to figure that out. They bought it before, sold it, then they bought back in. They bought it at a loss, and now it may be profitable. But anyways, overall, they're up 42.4 million on the stocks that they are currently holding. So paper wins of 42 million. You do see some negative options premium where they've had to chase the upside, especially right there on IBIT, but they are still very positive on the stock. So this is kind of what they're saying in this press release, where they're trying to capture more upside, and maybe it's working out, but we'll see. So hopefully this is all good and positive stuff for ULTY. Not much news in the portfolio. I think Google is going to do like a AI glasses, with Warby Parker next year, kind of similar to Meta and Ray-Bans. I don't even know if that's been a success for Meta and Ray-Bans or not. I saw those in the store and didn't see any reason to buy them. If you have Meta glasses, or if you're interested in that sort of stuff, drop a comment, let me know. But we'll see if that works or not. These big companies can afford to take losses on these little ventures. So anyways, guys, that's the ULTY portfolio update. I think they're going to be talking about all these changes on Wednesday on the usual call, so I'm going to listen in, hopefully in real time, and ask a question. But if not, I'll analyze it after the fact and deliver that information to you. So leave the video a like if you got some value out of it. Subscribe if you want to see more of this information. And if you're interested in going even deeper, my newsletter is 100% free. All you got to do is give me your email address and sign up for that. So thanks for watching. See you in another video.